Well, we've got low fuel prices. We've seen a halving of oil prices and jet fuel prices. That's obviously helping. But also we've seen some restructuring taking place, and airlines are also using their capital much more productively. So we've got airlines in regions like the US who are doing very well. They're actually now producing the sort of profits, the sort of returns that most other industries would consider to be normal.
So what exactly is behind the falling cost of air travel?
Because the fall of fuel prices have halved. The impact of that has been delayed in some regions, particularly Europe, because of the impact of hedging. Most airlines in Europe have hedged 80 to 90% of their fuel bill, so it takes time for that to feed through. It's now feeding through as competition, which is always intense in the airline industry, is leading to a lot of these benefits being passed on to the consumer.
IATA statistics show there's no real link between GDP and passenger numbers. Do you think they are connected? Does it maybe just take time for passenger numbers to respond to GDP movement?
Well, I think the health of the economy, and particularly important, the health of incomes for consumers is the key driver for air travel. But it's been a very volatile year in 2015, and in some countries like Brazil and Russia, we've seen a 40 or 50% depreciation of the exchange rate, which means the purchasing power of residents of those countries has collapsed. So they're not travelling overseas, they're travelling domestically instead.
Let's talk about the Australian market, a huge turnaround for Qantas and Virgin Australia.
Yeah, we're seeing, well, obviously low commodity prices is a drag in that region, but we've seen a restructuring of the airline industry, and it's been a successful move. We're actually now starting to see the airlines in the region being amongst the more successful in Asia Pacific. Asia Pacific has been held back by the weakness of the cargo industry, which is particularly important in your region. But what we've seen is some airlines have responded and are now producing some successful performances.
What is the outlook for the Asia Pacific market and also Australia?
Positive, but mixed. We've got some of the strongest growing economies in the world in the Asia Pacific region. The Chinese economy has slowed, but actually the consumer is in pretty good shape, and air travel is expanding strongly. We're also seeing open skies being developed in some parts of the region, which should be a stimulus to travel. And we've seen airlines tackling some of the structural challenges. So I think it's, on balance, it's looking better for 2016.
Then there's the US market, 15% margins, which is incredible for any airline. When you stack them up, though, against any other industry, they suddenly look normal compared to, say, Apple or even Boeing. But then the aviation industry is so susceptible to outside influences in a way that none of those other companies are.
Well, the airline industry is notorious for its weak profitability. It's one of the strongest growing sectors because people want to fly, but it's always been really hard to make what other industries would consider to be normal profits. Now, airlines in North America are starting to generate the sort of profits that most other industries would consider normal. They're exceptional by airline industry standards, but when you stack them up against other companies in the US, they look very normal and should be normal in the air transport industry if we're to attract the capital we need for the expansion ahead.
And now you've got airlines paying investors what we see as a normal return for the first time, and yet so many airline stocks still considered junk.
But we're starting to see credit upgrades. We've got a major airline in your region was upgraded to investment grade quality recently. We're starting to see financial markets recognise that, at least in some parts of the industry, we're seeing some structural change taking place, which is improving the financial health of those industries. But it's not widely recognised. We're still seeing PE ratios of half what we see for other transportation stocks in the US, for instance. So I think the airlines have still got a challenge ahead to convince financial markets that these are permanent improvements that we're seeing. And I think they are not just about low fuel costs. We've actually seen some positive effects from the restructuring taking place.